Good afternoon, everyone. Anthony Locke with Torrey Hills Capital, and welcome to the Cerrado Gold Webcast for June 11th, 2025. Hope everyone's doing well. Thanks for taking the time to join our virtual lunch. Very excited to bring you Cerrado Gold. They came through a couple years ago, but the story has drastically changed since then. So we're excited to give everybody an update. But just a quick recap, they are a Toronto-based precious metals mining and exploration company with three assets. The company's Minera Don Nicolas project is located in Argentina. It's a producing mine, gold and silver, with significant optimization, expansion, and exploration potential. The company also holds an 80% interest in the highly prospective Lagoa Salgada VMS project in Portugal and 100% interest in the Mont Sorcier iron project located near Quebec. Company trades on the OTC under the ticker CRDOF, on the TSX Venture under the ticker CERT. Currently trading with a market cap of only about 70 million US. We feel the stock should benefit from the long-term positive outlook for resources and the many positive investment catalysts expected in the next 12 months. With us today to discuss Cerrado Gold's operations and growth strategy going forward is the company's president, Hale Sanders. Cliff, it's great to have you on today, and thank you for taking the time to bring our viewers up to speed on all the exciting developments happening with Cerrado Gold. Before I turn it over to Cliff, I just want to let everyone know, I think you all know the format. If you have a question, type it into the Q&A or chat box, and we'll make sure that it gets answered. So with that said, Cliff, the floor is yours.
Great. Thank you very much for that introduction, Anthony, and thanks everyone for taking the time on the call today. Hopefully it'll be worth your while. It's interesting to note that having been introduced to the Cerrado Gold story a couple of years back, it is a fundamentally different story, but a lot of things have changed due to events that happened outside of our control. And really that, if you go back in time, the Cerrado Gold story you probably heard of 2 to 3 years ago was focused on development of our Brazilian asset, Monte do Carmo. Due to political changes in Argentina, which is where our primary producing asset, Minera Don Nicolas, is located, we were put in a position where, due to significant inflationary pressures, resulted us in the need to sell the Monte do Carmo asset in 2024. We sold that to Hochschild Mining under an option agreement, really to support the company and really strengthen the balance sheet. As you may recall, we had spent some funds to develop a new heap leach project in Argentina, and just as everything occurred, we were given the balance sheet squeeze. So that really meant 2024 was a transition year, a repositioning year from a balance sheet perspective. Operations actually performed exceptionally well, as we'll demonstrate. And really we're, re-entering 2025 and really retelling a very new story that really has significant opportunities for both the medium and the longer term for growth in various resource sectors, be it precious metals, base metals, and longer term in bulk commodities. So with that, I'll get into the presentation itself and then walk through that relatively quickly to leave some time for Q&A, but hopefully enough depth that you understand where we're positioning for the future. So what is Cerrado Gold today? Forgetting about what it was in the past or things of that nature. Today we produce roughly 55 to 60,000 ounces of gold, and that's been highlighted by a recent PEA we published in 2024, really just to underscore the near-term mine plan. We'll talk more about that in the coming slides. We expect cash flow generation based on the PEA was going to be about 50 million of EBITDA and 25 million of free cash at $2,100 gold. Obviously, at today's gold prices, if they hang in there, we'd expect to do significantly better on that basis. We've just embarked on a significant new exploration program in Argentina, something that we have been restricted from doing, first because of COVID restrictions really were quite extreme in Argentina, which really limited our ability for exploration, and then obviously with some cash issues in late 23 and 24 due to the changes in Argentina. But this program is now just commencing, and we believe the potential to add between 300 to 800,000 ounces in all categories relatively quickly will really cement that this has a significantly longer mine life than is currently highlighted in our resource statement. As Anthony indicated, we've recently concluded a combination with Ascendant Resources, bringing in the Lagoa Salgada VMS project, which is located on the highly prospective Iberian Pyrite Belt. And if you know the belt, there's Neves Corvo, there's Aguas Teñidas. Both of those mines sold for well in excess of 1.5 billion, but they've been around for over 20 years. So this is an area with lots of room for scale and ongoing exploration discovery to expand beyond the current project that I'll outline in the presentation. And we expect to be in a construction decision by late 2025. And really, this opportunity came to Cerrado. It's a well-known asset to the management team, but really just couldn't get enough capital to get over the line. So combined with Cerrado, we now believe this asset is well positioned for that construction decision. Longer term, we have on a critical mineral opportunity is the Mont Sorcier high-grade iron project. We're looking at producing 67% or better iron concentrate, which is suitable for the direct reduction iron and the so-called green steel transition. And this is happening around the world for this higher grade concentrate for its environmental benefits, and also opening up new technologies that really require the higher grade concentrate. So if you look at any of the big players, Fortescue, BHP, Rio Tinto, they're all trying to add a degree of high grade material to their product mix going forward. Currently, we're advancing a feasibility study, which we expect to be completed in Q1 of 26, as a way to daylight some of the value, which we believe is completely overlooked in the current valuation of Cerrado Gold. We did complete a PEA in 2022 that had an NPV of 1.6 billion. Since then, we've improved the product quality, so we think that valuation is still in a very strong position. You know, the question for a lot of companies or a lot of junior companies these days, you have great stories, great plans, but can you actually deliver? Cerrado's in the unique position because of the asset sale of to Hochschild Mining, that we have a strong balance sheet with 20 million cash as at the end of Q1. We're getting incremental cash flow coming out of Argentina on a monthly basis. And we still have additional asset sale proceeds of approximately 15 million guaranteed from Hochschild in 2 tranches, and about 10 million of additional funding possible in the next 2 years from an option agreement that we have. So what the company as a high level overarching theme is looking to do is leverage existing cash flow and cash balances to deliver the next project development in the pipeline using minimal, if any, external dilution to bring these projects to fruition. Again, just highlighting at a high level where we are located. You know, on the diverse geographic portfolio, we have development teams at each asset. So the corporate level is really just an overriding overview of the various assets. Each team has its own development team directly allocated. So really limiting, extending the team too far. In the near term, just to highlight, we will remain a precious metal story, depending on if you want to use our feasibility study prices, our spot prices, because the Lagoa Salgada project has significant gold and silver credit embedded in that VMS profile. So we'll, in the short term, very much a robust precious metals focus. Longer term, it really is that value proposition by bringing the 3 assets together. Really, this highlights as an extensional valuation mismatch to the current share price from what could be developed over the coming years. Looking at it in a couple of more, direct ways, looking at it from an NPV valuation, and these are a third-party 43-101 report, so done at the prices of the day. Back when we did Minera Don Nicolas, it had 111 million NPV. Obviously, at today's prices, it'd be well north of 200. Lagoa Salgada, as we bring that project forward, that had roughly 150 million NPV. And then longer term, you're looking at adding up to 1.6 billion of NPV for a total NPV, just shy of 2 billion US. That's the equivalent, as you can see in the top green arrow, of going from roughly 55,000 ounces currently to an implied gold equivalent production of in excess of 328,000 ounces, depending on the price relationships at the time. Another way to look at it is look at it from an EBITDA perspective. Again, these are using the 43-101 report, so at current metal prices, be significantly higher. MDN was projected to do at least 44 million in 2025. Adding Lagoa, we're going to get a combined, north of 110 million, probably well north of that if gold prices continue at these levels. And over the longer term, you look at a story that could be generating 500 million of annual EBITDA, and you put a 5 or 6 times multiple, you're looking at a story that could be in the $2 to $3 billion valuation. And obviously that sounds like a great step up from where we are today. But clearly, we are not looking at pure exploration risk anymore. These are projects at the feasibility stage or in operation today. And 5 years in the mining cycle is relatively short. So clearly, as we continue to hit the goalposts, bringing these projects forward, continuing to daylight the value, we see significant re-rating potential to happen over the coming years. Going into a little bit more detail on the individual assets themselves, Minera Don Nicolas is located in the province of Santa Cruz in Southern California in Southern Argentina, in the Patagonia region. Now we have an extensive land package of in excess of 330,000 hectares. So outside of the government, we have the largest individual land package. It's in the prolific Deseado Massif, that's home of Cerro Vanguardia, Cerro Moro, which is Pan American, Cerro Negro, which is Newmont, San Jose mine owned by Hochschilds and McEwen Mining. So this is a well-developed gold mining district, but given Argentina's changing political landscape, really should have significantly more mines on it than it does today. So as I said earlier, our current plan is outlined for steady state production between now through the end of 2028, based on the PEA. We have more than sufficient resources to deliver that plan. Our current production is focused primarily from a new heap leach facility that we completed in late 23, and that is now ramping up to its expanded capacity of 4,000 to 4,500 ounces per month. The initial exploration program, and we'll talk about it in a little bit more detail in a moment, is really focused on expanding near mine targets, but also going underground. And why do we want to go underground? You look at all the mines in the district, they have a combination of open pit, underground, and heap leach operations. The previous owners of Minera Don Nicolas were not a mining focused group of companies that were very uncomfortable about underground and didn't want to do heap leach. We're not adverse to any of those processes as long as they make economic sense, and we will continue to use the various tools to deliver more production growth and mine life extension going forward.
And this is a shallow deposit too, right, Cliff?
Uh, the current operations are shallow. The heap
Yeah.
leach is at surface. It's a bulk mining opportunity, but really the key thing here is we're not trying to do anything that has not already been done in this part of Argentina. If you look at Cerro Vanguardia, obviously a little bit larger scale, but started as a pure open pit operation that slowly transitioned into underground and heap leach with continuing growth in the overall size of the resource. Cerro Negro went from a very minimal de minimis resource to roughly 6 million ounces now. It started more as an underground mine, but now it's a combination of underground and open pit. Cerro Moro, which is a little less history to it, again, is very rapidly grown from a modest resource size to where it is today, again, with that combination of the different types of mining. And so we believe there's plenty of room here, given the lack of exploration. The last real meaningful exploration program was actually done before the mine was built back in the early 2010 era to 2015. So we see plenty of room on the target land package to continue to grow.
Great, thank you.
But one of the other things to also highlight is the significant operational improvement that the team on site has been able to do. When we acquired the mine in sort of Q2 of 2019, it was a very underperforming mine, which is one of the attractive factors for us is coming in as a more mining sophisticated group of individuals and really turning the mine around. So outside of 2020, which was a difficult year due to COVID, we've had a rapid improvement in production profile, averaging over 50,000 ounces in the last 3 years and targeting 55 to 60,000 ounces this year. At the same time, despite being a smaller scale than our larger brethren in the area, we've been able to keep our costs relatively competitive despite the inflationary environment that we are still seeing and still under some pressure in Argentina to manage. But that is continuing to improve with the new political influences, the opening up of the investment market. And there's a lot of desire you're seeing from global companies to invest in Argentina. Lundin, Glencore, Rio Tinto, to name a few, all have multi-billion-dollar projects they're looking to grow in Argentina as the market continues to open up with the new policies that are in place.
Yeah, and one of the questions that came in is, have you seen any benefits from the new monetary policy and the new leadership down there, or is it too early to really see those benefits?
We're starting to see them now. We've seen a significant reduction in month-over-month inflation. We're now down to more reasonable levels compared to the 300 to 400% we saw at the end of 2023. We're seeing all the right commentary coming out of the various agencies, be it financial or export. And we've also seen the removal of a certain amount of capital controls, such that as of 2025, which is the first year we we would have any excess cash, you can now dividend 100% out of country. There's still some lingering issues from monies from before, but that is slowly being removed as well. And we would expect by the time we have the elections in October, all ongoing capital controls will be removed. And that's very much in line with the comments made by Millet and Caputo to date.
Great, thank you.
Just a little recap of what was in the PEA and that we did in 2024 and trying to look at it in today's context. Obviously, gold has had a tremendous move, and that is significantly helping the potential valuation. You're looking at the potential free cash flow in excess of 60 million if gold prices stay at these levels versus 25 million under the PEA. The heap leach now is fully completed at the expanded capacity that was outlined. So it's going to be doing 4,000 to 4,500 ounces probably by the end of Q2 of this year. We're continuing to process some low-grade stockpile material through the CIL plant in expectations of augmenting that with high-grade material from the underground mine, which we're just commencing operations of in the near future in Q2. But really the potential here, the PEA really outlined a solid backbone for growing Minera Don Nicolas. We do not believe this is all we have there on site, but really is providing sufficient capital to do a more material exploration program to really define more open pits, because we believe there's plenty of opportunities there. By going underground at Paloma, which we'll mention in a moment, it's offering a significantly cheaper way to explore underground, again, copying the processes and systems that were done primarily at Cerrado. And given the size of our land package, as Argentina continues to open up, if someone wants a footprint in Argentina, we would be a very attractive target on that basis. Looking at what we're doing, as we've indicated in our various financials, we're targeting to go underground in Q2. We'll just be doing a very simple portal off the side of the pit wall. This pit was designed at about $1,500 gold, so it actually ended in very robust high-grade material. So initially, we want to get underground and start augmenting the low-grade stockpiles with material that could be anywhere from 3 to 10 grams per ton, depending on where we are in the mining sequence. But really open up deeper underground exploration following the structures underground. You have to look at on surface here, there's very limited surface expression due to the fact it's kind of like a gravel desert down there now, very sparse vegetation, very limited outcrop. So following it from a geophysics or a structural basis is actually how you've seen the development of Cerrado. They have probably 30 different underground access points going forward. So we believe this will be one of many targets. Obviously, being underground in the near term will be very quick. Then longer term, or sort of call it the medium term over the next 12 months, as part of this program, we have several high target areas. Obviously, Paloma, as I mentioned, going underneath the pit. Another area we have is called Paula Andrea. And this is an area where we did do some mining of some high-grade chutes that came to surface, but never really had a chance to follow it up to depth to find that source material. So we'll be drilling in that area. And just another target to highlight, we also have what we call Chispas. It's a long strike from the Cerro Moro mine, and right in the middle, effectively, is the new Nathi discovery that was discovered by Yamana and will be the future of the mining that Pan American Silver does. We have about 3 kilometers of that structure on our property, never really been drilled on any meaningful basis. I could probably add about 6 or 7 more stars of targets for follow-up, but just for the sake of this presentation, we have numerous targets both around Martinetas, which is where the plant is, and in the north where Paloma is. But because we also have the heap leach facilities in place at Calandrias, we also open up the opportunity to create additional heap leach facilities across the property, where perhaps in the past, the prior operators would have said the material is too low grade. We'll say we'll just use a heap leach process as opposed to using the CIL mill. So we can very quickly add production growth as we add resources. Stepping over to Portugal, and this near-term production growth and really catalyzing the story and how we can use the cash from one asset to deliver on the next asset in the portfolio. So we currently own 80% of the Lagoa Salgada project, which has had a feasibility study completed on it, which had an NPV of about 147 million, a 39% IRR at feasibility study level prices. So this was back in 2023. So we've seen significant improvement, especially in gold and silver, which is going to obviously help the updated study that we plan to issue in Q3. But really, this story is still very much precious metals related story, and in the European context, also a critical mineral story because it will also produce zinc, copper, and tin, and a little bit of lead. Based on the feasibility study, it was going to be one of the lowest cost producers, especially for the first 5 years, as the grade is much more attractive in the early years of mining. You're looking at a life of, in the first 5 years, of sub 60 cents per pound zinc equivalent, and even over the life of mine, sub 80 cents since then. But what we're doing right now is we're undertaking an optimization of the feasibility study, both in improving the metallurgical test work, which we've been outlining to the market, where we're seeing improvements in recovery and in concentrate grades, making them much more attractive products. We're also at the point now we expect the environmental approval anytime in Q2. We have seen very positive and supportive comments to date, so we're just waiting for that final decision. And we expect to be in a construction decision by late Q4 of 2025. And it's a relatively straightforward construction build. It would take a little less than 2 years. So by Q2, early Q3 27, we would expect to be in production. We expect very limited equity dilution required to bring, if any, depending on where gold prices continue. And this is because we're seeing significant support using the Export Credit Agency with supporting Banco Santander to provide about 70% of upfront capital needs. We have continuing support from Sprott, who already has a modest stream on the asset, and potential off-takers. So we're looking at balancing the various components here of the capital stack. But to get to that decision, and one of the reasons that this was attractive to Cerrado, we only needed about $5 million, which has been fully budgeted for the company this year to get to that decision-making point. And just to highlight, this project is deemed a project of national interest for the Portuguese community and mining industry. So again, we're in the right district, we're in the right area. It's a very mining supportive area going forward.
What's going to be the capex on that?
In the feasibility study, it was around 160 million. We expect that to come down to around 150 million based on the optimization we've had the opportunity to do.
That's great. Very reasonable.
So, and as I said, I think the offsetting benefits from some of the optimization in terms of the operation, in terms of mine sequencing, obviously better pricing, will continue to add to that, the actual NPV of the project also going up to making it a much more attractive vehicle going forward. This is just outlining some of the feasibility study results from the 2023 feasibility study. And this really just emphasized, even prior to optimization, this was a robust project. And as we'll demonstrate, we already have 15 million tons of proven and probable grading in the north zone, just under 10% zinc equivalent. South zone is a bit more copper rich, at about 1.2% copper equivalent. But we already also have 19 million tons of additional measured and indicated material that's not in the mine plan, which we believe could very quickly be upgraded with sufficient infill drilling to continue to grow the mine life going forward. But the issue here, I guess, is really, this is a nice profile. Sorry, I got ahead of myself on that last slide. But this is the profile to bring this project into full construction. As I said, we're at the point of getting that feasibility study updated by early Q3 of this year. We expect the EIA approval in Q2. And the recapping, which is really outlining and agreeing to the terms of how we're going to monitor EIA compliance. We do that with various government agencies. We expect that to be completed late Q3, early Q4. In the background, we continue our negotiations on project funding and expect to be in a position for drawdown in Q1 and commence construction. As I said, roughly 2 years we'll be in production, obviously ramping up in the second half of 2027. When you look at the optimization strategy, what are we focusing in on to update the value of this asset? One, improve recoveries, both from the individual metals. We're seeing significant improvement in zinc and copper recoveries and precious metals recoveries, just having more time to review different reagent strategies. But we're also seeing an upgrading in the overall concentrate grade, which just again makes it more attractive. We're reducing any penalty elements within the concentrate to make it a more attractive, because the region is known to have penalty elements. As a result of the improved metallurgy, the resources are expected to go up slightly, but the NSR value per ton is expected to go up significantly adding to the overall value. Capital is expected to come down modestly. We're looking at a modular paste backfill plant as opposed to standalone, just improving the footprint, things of that nature by simplifying the flow sheet, looking at trade-off studies for things like dry stack tailings as opposed to more conventional tailings. So these are all coming in. But one of the main things we're also looking at is the scale of the operation. It was initially at 1.2 million tons in the feasibility study. We don't think that's the optimal scale, especially with the exploration upside we see still coming down the pipeline. So we're going to look at those trade-off studies. Should it be 1.5, 1.6 million tons per annum? We are in our permits ensuring that we can permit for up to 2 million tons per annum if needed. Oops. But one of the long-term value opportunities for something like Lagoa Salgada is to replicate what was done at Aguas Teñidas, which is now owned by Sandfire, what was done at Neves Corvo, which is currently owned by Boliden. In 2023, Sandfire acquired Neves Corvo from Trafigura and Embadala for 1.8 billion. Boliden acquired Neves Corvo from Lundin for roughly 1.5 billion. But both of these assets started off relatively modest in scale and continue to grow by finding additional VMS pods, for lack of a better term, as they continue to drill at depth. Currently, we're still quite shallow. We're roughly between 200 to 300 meters underground. You look at Neves Corvo, the Lombador deposit, what they're mining now, that goes down to a depth of about 1,500 meters. So lots of room to grow at depth. We have lots of indications of additional structures based on geophysical anomalies on a 1.7 kilometer corridor between the north and the south zones, but also on the overall property itself. The anomaly actually goes by about 8 kilometers. So one of the things that is happening currently is the EU is funding what they call an undercover program, where they're using deep penetrating radar and various other geophysical techniques, very similar to what Lundin did to find the Lombador deposit. And they're doing this at a variety of different assets, but they are funding a significant program at Lagoa Salgada, which we expect to help accelerate definition of further resources at depth as we continue to go forward. So to us, Lagoa Salgada is still at its infancy. We have a nice starter mine with lots of room to grow over time. Switching gears to that long-term optionality that the Mont Sorcier project brings to us, it's located just outside of Chibougamau in northern Quebec, so very much a mining-friendly area. There's lots of mines in the area. Stornoway Diamonds was there, Nemaska Lithium. There's lots of historical mining in the area with existing headframes. So they know what mining is all about. We're about 25 kilometers from a public railhead owned by CN, which is common carrier. And that has over 370 kilometers of rail between the town of Chibougamau to the port of Saguenay, which is owned by the federal government, and it's a year-round facility. These are extremely underutilized infrastructure. But if we had to put in that infrastructure, which many iron ore facilities have to do in places like Australia, that's probably 1.5 billion of upfront capital that we don't have to spend, and the time that would be required to develop that asset. Obviously, also being in Quebec, we have access to low-cost hydropower, and based on the strength of the feasibility study, the preliminary economic assessment, we jumped straight to feasibility study because the improved metallurgical test work is significantly enhancing the value of this project, not just as a standalone, but in the eyes of the green steel, iron ore, or steel making business for all parts of this sector. And it really is in line with Quebec and Canada's critical mineral strategy to produce high-grade iron ore, similar to what you see at Champion, Tacora, which is private, ArcelorMittal, but they're all along what I would call the Labrador Trough region. That area is quite congested. All the facilities going down to the Port of Sept-Îles, whereas we would be a first mover at the Port of Saguenay.
Feasibility, when do you expect to report that for Mont Sorcier?
We're targeting Q1 26. The work is ongoing currently, as we've outlined in various releases, and we've actually just recently started infill drilling to upgrade the resources to proven and probable. And as I'll highlight, this is not an exploration play. We already have 1.2 billion tons of magnetite resources, and it is that magnetite resource that is targeted by the green steel industry for a variety of reasons. You can get the high grade, high purity. It can go to direct reduction iron. But even if you have to use the old-fashioned blast furnace approach, it significantly reduces the need for coal and improves your overall efficiencies and reduces your environmental footprint. So it's attractive to all parts of the green steel uh, sector going forward. What I wanted to highlight here is the PEA that we did in 2022 was targeting 5 million tons per annum production rate of concentrate, a roughly $575 million build, but producing an NPV of 1.6 billion. But at the time, we were only looking at a 65% grade product. We've now gone up to 67, and it is a step change in pricing and premium for that compared to the more traditional 62 and 58 percent material. So the demand for the high grade material will continue to displace this lower grade material going forward. Our cost structure is expected to be very similar to the existing mines in Canada. We chose going to China as the most expensive destination, but now as a high grade 67% product, it's opening up Europe and the Middle East as potential off takers, and obviously that would be significantly cheaper. But what's most attractive about this asset? As I said, we have 1.2 billion tons. This is only using about 25% of our current resource base for a 21-year mine life, generating cash flow of roughly 350 million US and 235 million of free cash flow based on the feasibility study. Now, we're probably going to see some capital cost creep in light of passage of time and things of that nature. But I think, again, that'll be offset by the improved product quality and the continued desire for these high-grade facilities. And despite the early stage, we've already seen support for project capital, non-recourse project financing, of up to 70%, again, supported from the UK Export Credit Agency, but also by TD Bank here in Canada, as it fits their mandate for growing the critical minerals, reducing the environmental footprint, and really it's just something that's, the mine life that is provided really fits into their permitting strategy. The development strategy. But clearly at 5 million tons per year and 1.2 billion tons of resources, there's significant potential here, call it in years 3 to 5, to grow to 5 to 10 million tons of total production and using cash flow to continue to expand. Why we chose 5 million tons at this stage, and it might change a little bit in the feasibility study, is really we know that the railway and the port can do that tomorrow without any significant capital needs or expansion potential required on those facilities.
Cliff, have you seen any additional cooperation from the Canadian government? Obviously, steel with everything that's going on has been a touchy subject, and I think every country is trying to secure their own supply chains. Has that helped with permitting or helping to fast track some of these projects, or is it pretty much still the same?
Well, to date, I would say the language has been very positive. As you've noted, all the various countries, whether it's Canada, the US, Europe, have all indicated a desire to accelerate their domestic capacity, and really is about the permitting. And that is an issue in Canada. It was quite extensive. It took a lot longer. And that is where we're seeing the comments both at the federal and the provincial level to streamline that. Unfortunately, no projects have yet gone through the process to see if there's a substantial benefit. But I think as that continues to evolve over the next couple of years, we'll be the beneficiary of that. As I said, because this is a high grade, high purity iron ore, both Quebec and Canada listed as a critical mineral, whether it's consumed here or is improving the global footprint of the steel industry. So they are supportive of that in their political endeavors to reduce the overall footprint going forward. As I said, unlike a lot of junior stories, what do we have today? We already have just under 700 million tons of indicated resources, an additional 550 million tons of inferred material in what we call the north and the south zone. Our initial focus on the feasibility study will be strictly on the north zone. It's bigger, more homogeneous. That's a very easy from a mining perspective. It literally sticks out of the ground. But we're only using a fraction of the total resource, as I said, as part of the current mine plan, leaving plenty of room for growth over time. And on the bottom left here, we've also just put a show of the resource and the grade of a lot of the other projects, the bulk of which are being developed in Australia, which really just highlights the resource grade. We have a very strong resource grade for a magnetite deposit. It upgrades quite nicely at a 3-to-1 ratio when you're concentrating. But we also have the scale and the size that delivers the right product mix at 67% grade material. The only other one that's actually going to be potentially better is black iron, but unfortunately their asset's located in the Ukraine, and it's probably not going to be developed anytime soon. So again, the project fits the needs of the global industry going forward, and I think that will continue to benefit us. But I would say right now in the hands of Cerrado Gold shareholders, you're getting this for free. Now, the other thing, as I said initially, is can we actually do this? How do we do this without having to go to the market every 6 to 12 months and raise additional equity? One, we are currently with our budget for the expenditures at both Mont Sorcier and Lagoa and elsewhere. We expect to end the year pretty much flat cash on cash to where we are today, and that's going to be supported by the free cash flow from Minera Don Nicolas. Obviously, right now we're saying 25 million, but obviously if gold stays at 3,300, that'll be significantly larger and obviously benefit our year-ending cash balance as well. We still have 15 million to come from the sale of Monte de Carmo from Hochschild's. That's pretty much a guaranteed inflow of funds on these various maturity dates of June 26 and March of 27. We also did sell an option agreement on some land we had in Argentina to our neighbor Cerro Vanguardia. This land was non-core to us. It was too far away to ever be part of our operation. They're currently drilling away, and they have a $10 million payment if they assume to exercise this option by 2028 or earlier. So this could be an additional 10 million bucks. Again, to minimize any dilution that is potentially needed for Lagoa Salgada. Obviously, if gold stays here, probably minimal and going forward. And as we move to Mont Sorcier, we'd expect to be in a position to leverage off the cash being generated both from Argentina and Portugal to fund the bulk of any equity needs on that asset. Just a little bit more on the project financing support we're seeing in place, and we're now seeing this across the mining space. You're seeing this in a lot of sort of junior to mid-tier mining companies looking for project financing because the historical mining focused banks just really don't exist. So we're seeing the various export credit agencies of various European countries, Canada, the US, they all have their own, but you have to look for what benefits your project the most when you're comparing the different opportunities. When we were looking at Lagoa, we had 5 different proposals looking at supporting that project. We used the UK Export Credit Agency, and it had the most flexibility for meeting our needs. And what are the benefits of these sort of proposals? These are very long-term and low-cost debt obligations because the Export Credit Agency significantly removes a lot of the risk from the project operation from the bank. So you're able to borrow the money at lower cost because of that sort of insurance wrap going forward. And that really allows this to be very attractive for mining, because especially when you have tenors of 8 to 10 years to repay the debt. So this is something we're seeing becoming much more prevalent within the mining space, and we were well established with our contacts to bring both of these projects forward under this basis. Again, one of the things you want to see in a junior mining company that's moving forward, not just through exploration, operation, and construction, is has the team done it before? And the team here at Cerrado Gold has been together on and off for the better part of the last 20 years. The first real project would have been at Desert Sun Mining, where they acquired the Jacobina mine in Brazil for a very modest amount of money, turned it around, reopened it, and within 4 years sold that for just under 600 million Canadian to Yamana. That mine remains a very productive mine, producing roughly 200,000 plus ounces of gold per year, and now is the backbone of Pan American Silver's South American operations. The team also developed Largo Resources, the lowest cost, highest grade vanadium mine in Brazil. And that went from essentially negligible market cap, so pure exploration and grassroots, through definition, a feasibility study, financing. Despite the global financial crisis, was able to get financing in 08 and 09, through the construction phase, and then obviously ramp up. And it had a high market cap of 2.5 billion. Since the team has left, they've gone through some, I guess, structural changes and directional changes since then. But at the time, the team was very successful. Also at Sierra Metals, from an operational standpoint, we repositioned 3 operating mines in South America and tripled the market cap while we were there. And effectively, we left and created Ascendant and Cerrado Resources as 2 separate companies at the time. We've also been able to attract very strong people uh, in Portugal. It was João Barros, having over 20 years experience in Portugal. In Argentina, Veronica Nahara has 20 years working in Argentina directly and was the former chief executive officer for Minera Don Nicolas before we acquired it. And in Quebec, Hubert Vallée, who's been essentially involved in every iron ore mine that's been developed in Canada and was one of the first uh, key employees at Consolidated Thompson, which is now today Champion Iron Ore. So again, we've been able to assemble a very strong team and a strong track record to deliver on this growth profile. Very quickly, the capital structure. This is post the completion of the recent transaction. Share price, around 70 cents. So our market cap is still relatively modest, roughly 93 million Canadian, or as I think Anthony indicated, at 70 million US. We think we're still extremely undervalued for what we have today and what we continue to bring forward. I think as we move forward over the next 2 years, every quarter we continue to deliver and move the project closer to fruition. We will continue to see an ongoing re-rating of the shares as we move through this cycle. So just to wrap up, the current pro forma company, we're a steady state gold producer producing 55 to 60,000 ounces per year for the next several years, with significant opportunity to extend that mine life. And if you look at some standalone gold producers producing that amount, you're going to see market caps north of 200 million, and they don't really have any other asset to go with it. So beyond that, obviously extending the mine life in Argentina is our first objective, to extend that valuation there and get that re-rated. As I mentioned in Lagoa, as we go through the next couple of quarters, get the environmental permit, get the updated feasibility study, and then the project finance. We think we'll be in construction in the early part of 26, moving that project closer to realization and being revalued in the market. Longer term, Mont Sorcier provides a significant option value for the company. And we see the best way of getting some of that value for current shareholders is by completing the feasibility study, and we'll reevaluate at that time. What's the best way forward? Do we joint venture it, sell it, move it to the next level by ourselves? And we're well funded to deliver on that growth profile with the cash we have, the cash that's coming, and the potential additional asset sale proceeds. And we're continuing to see some strong support for the construction funding of both Lagoa and Mont Sorcier as we move forward. So with that, I'll wrap up the formal presentation and open it up for any questions.
Thanks, Cliff. That's great stuff. We have a bunch of questions in queue, and I'll get to them. If you have any other questions, please feel free to type them into the Q&A or chat box. One of the questions was about, divesting potentially. At this point, do you feel like the only property that you have, only project you would have that you would consider divesting is Mont Sorcier? I mean, Lagoa Salgada, I know with that capex, it's pretty manageable. But is the property in Quebec probably the one that you would consider divesting, or would you consider divesting Lagoa Salgada as well?
Well, we're not in love with assets. We're here to make money value for shareholders. And so, we look at all opportunities to come forward. What I would say right now is we're not looking to sell anything because we don't think we're appropriately valued. And that's especially the case for Mont Sorcier and Lagoa. If you look at those as standalone companies compared to some of their peers and where they are, if you look at other companies in the Iberian Pyrite Belt, they have significantly more value than the combined Cerrado Gold vehicle without having three assets in its stable. I think Mont Sorcier delivering on that feasibility study and really emphasizing the value. Let's assume it stays at 1.5 billion of NPV with a feasibility in place, moving much closer to permitting, and that cycle, should that trade at 0.1, 0.2 times by itself, which is 150 to 300 million US of value, which we don't think is being accredited to the Cerrado Gold shareholders at any point at all at this time. So we don't believe a rush to sell is necessary, obviously with our funding. And so the best way to deliver that value is to start showing the market what that value is, more than anything else, and reevaluate as we move forward.
Yeah, absolutely. On the flip side of that, are you looking at any acquisitions?
Well, we're constantly looking at acquisitions that come through. Obviously, right now with our relative valuation, it's not attractive unless there's something outstanding. We do have a very strong team still in Brazil people we know that we can bring back on very quickly. So we're continuing to look in South America and other areas, but our hands are pretty full with what we have at the moment.
Absolutely. Do you have enough land at Minera Don Nicolas, or do you feel that more should or could be acquired to expand the resource?
330,000 hectares. If we get any more land, we think the government might come and ask us to give some back because it's such an extensive land package. It's very difficult to really explore it quickly. So we're doing it. We're not a Barrick Resources or anything like that. So it's a land package. We think we have significant areas that have been underexplored at this point in time.
Great. Since you have good cash flow from your mine in Argentina, which will continue to increase, can you discuss how that improves your optionality with further development in Argentina and Portugal? What type of producer do you see the company within 3 to 5 years?
As I said, the key thing now is to leverage the cash flow from one mine. So for the cash that's being generated in Argentina right now, firstly, it'll be used to fund ongoing exploration there to extend that mine life. So we believe we can go from our current mine life, call it 3.5 to 4 years, out to 10 years relatively quickly with relatively modest expenditure, which I think on that asset alone, you'd see a significant re-rating. We also think if gold prices continue near these levels, any equity needs that are needed for Lagoa Salgada will be de minimis, if any at all. So in the short term, we're going to use the cash that we generate to make a more substantial company. And as I indicated, if you look at the combined MDN and Lagoa Salgada, it could be in excess of 80% precious metals and still be producing copper, zinc, and lead and tin on the side. So making a very attractive portfolio in the sort of the medium, call it 3 to 4 year time horizon.
Yeah, absolutely. And on as a follow-up to that question, someone is asking, what is your outlook for the other metals at Lagoa Salgada, zinc, lead, tin, in terms of prices? Do you think those will continue to perform well?
I think they'll continue to perform well. You're not seeing any of the major copper projects actually being built and constructed at this time. We're continuing to see a lot of demand projected for electric vehicles, maybe not as fast as it was before, but still electric vehicles take up 4 times as much copper as a traditional vehicle. And obviously, if you want to use electric, you've got to enhance the grid of electrical distribution. So the demand outlook for copper remains very attractive in our view. Zinc is, again, it's a steel issue in terms of uh, corrosion. So as long as the cars are made out of steel, that's going to continue to grow in demand. But again, you're just not seeing any projects being built. And part of that is uh, all the big companies are looking for the mega projects, 5, 6 billion. So that's leaving, and the current market for juniors or mid tiers has just been for the last several years very, very weak. So you're not seeing the more modest sized mines being built at this time. At the same time, none of the big ones are being built. So the supply demand profile continues to look, in our view, relatively strong for all the commodities across the board. And then
Yeah,
that
and another,
includes iron ore because of the nature of the iron ore product we have. Obviously, the bulk of the industry, it's over 2 billion tons per year. So it's the biggest metal industry around the world. The bulk of it is still the lower grade 58 and 60% iron, which they want to get rid of as quickly as they can.
yeah, and I was reading that data centers will be big, will create a big demand for copper as well.
Correct.
How much do you plan to expand the mine life at Minera Don Nicolas? Right now, I think it's what, 4 or 5 years, 4 or 5 years. Is there any way? I know you touched on it a little bit, but can you talk a little bit more about how much further out you think you can go?
You
It
know,
obviously depends on what you find when you're, during your exploration, but do you feel pretty confident?
no, we feel very confident. We're targeting to get to that magical 10 years. I think that's a turning point in terms of valuation. We don't think it's uh, obviously it's never a given, but our current program is targeting between 300 and 800,000 ounces in all categories and all types of material. As I said, we can very quickly ramp up the CIL plant to full capacity with higher grade material, and that could support 50,000 ounces of production by itself. What we need to do is to find sufficient material to 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 flow through that. We can continue to grow the heap leach facilities by making a new heap leach pad anywhere on the property that we find that material. So it's a question really of having an opportunity now to do a real exploration program as opposed to the kind of piecemeal programs that were available prior due to either COVID or lack of capital restrictions. And again, just to point out, when you look at Cerro Moro, Cerro Vanguardia, Cerro Negro, all of the mines in Argentina actually have relatively short mine lives, and that part of that is due to the restrictions that have been in place. That none of the companies had a great desire to grow it. But if you look at Cerro Vanguardia over the last 20 years, every time they've got low in terms of resources, they have a significant program, and lo and behold, they find another 10 years.
Yep, great. Stock has made a big move lately. Any warrants in the money that might help you raise a little bit more cash?
Uh, Very minor at this point in time. We did roll back a lot of the options and warrants and cancel them about 9 months ago.
Hmm.
So it's very limited outstanding at the moment.
Great. How will the feasibility study change versus the PEA at Lagoa Salgada?
We've just had time to improve the metallurgy. So as I said, we expect to see an improvement in straight metal recoveries, and that's across the board, especially the gold and the silver. As we've had a chance to better define the resource, it's very structured. It's a lot of very unique areas. So the mining sequence will be key as well to ensure that you get the right mixture of material. We're also seeing an improvement by having the opportunity to use more reagent styles to see better concentrate grade. So it's just making a more attractive product to potential off-takers. We've had a chance also to improve the footprint and just some better design criteria to lower the overall capital cost. So we think both the capital and some of the operating costs will continue to edge. Don't expect a step change on the capital side or the operating cost side. It's more going to be a step change on the metal recoveries and the value per ton, and thus the NPV.
Great. This next question, actually, it's let's put them both together. Do you have any idea of the CapEx to go underground? Is additional permitting required to expand at Minera Don Nicolas?
Going underground initially right now is we're actually developing in ore, so it's kind of going to pay for itself. Within our budget, it's only a few $1 million to get the equipment, get the portal set up. So we're fortunate on that basis that we're just literally ramping off the side of the pit into ore, and a lot of the development work will be in ore. Obviously, it won't be as voluminous as when we get into the proper stopes, but it will offset any meaningful capital.
Okay. And is additional permitting required to go underground?
No, sorry, forgot about that. We
Yep.
already have the permits in hand.
That's great. Last question. In light of increasing cash flow, do you plan to leverage more debt as you continue development or and minimize shareholder dilution?
Well, we have continued to repay debt in Argentina. That was developed from building the heap leach facility. There was a lot of very unique debt available because of the changes in the political climate. So that we continue to repay and delever the balance sheet in anticipation of obviously leveraging back up to build Lagoa on a non-recourse project financing basis. Now, with Ascendant Resources coming on, there will be some stream-related debt that will appear on the balance sheet, but it's related to the future stream. It is not traditional debt in the sense that we have to repay it. It will convert into stream payments going forward.
That's great. I think we're going to leave it there. I want to thank Hale Sanders for coming on and giving everybody an update on Cerrado Gold. A lot of exciting stuff. And as Cliff mentioned earlier, these are late stage projects. They're all in, basically at the feasibility stage. And then obviously you have Minera Don Nicolas in production. So, again, as Cliff mentioned earlier, in mining, life, we're not far off from seeing Lagoa Salgada and Mont Sorcier in the mix in production. And as if you think gold is going to continue to go higher, Minera Don Nicolas only looks more attractive as they continue to explore and increase the reserve. So a lot of really exciting stuff. Hey, before we wrap up, Cliff, any parting words for our guests?
No, nothing really. Just one, I want to thank them for taking the time out and listen to the story. Feel free to reach out to myself or Mike McAllister, who heads our investor relations department, for any additional questions or thoughts. But I think, Anthony kind of hit it on the head. 2024 was a year of repositioning for Cerrado, perhaps a little bit in the doghouse for the uncertainty with what was going to happen. And really, this is now in 2025, a re-emerging story. We're getting a chance now to bring the pieces of the puzzle together to really show how over the next 5 years we can go from a sub $100 million company to having the potential to be a $2.5 billion company. Obviously, we have a lot of things to deliver on, but that is the basic premise here that we're working on. And management and the directors are still very much in line with shareholders owning in excess of 20% of the capital.
Yeah, and that's a really good point. I think management owns roughly a quarter of the company, and so they have skin in the game for sure, and they don't want any dilution if they can avoid it. So it's nice to have the opportunity to own it alongside the management team. So it's another feather in their cap. In the meantime, you can get additional information on the company at their website, cerradogold.com, including details on the company's current projects as well as latest press releases.